Welcome back to Hustle to Holdings, where we explore how people turn hustle into long-term ownership. Today's guest has built an impressive real estate portfolio valued at over 10 million, with a focus on one of the most talked about asset strategies today, accessory dwelling units or ADUs. Over the course of their career, they've been involved in more than 500 ADU projects, giving them a unique perspective on scalability, operations, and long-term portfolio growth. This conversation isn't about step by step instructions, it's about mindset, systems, and what it takes to build at scale. Brian, welcome to Hustle to Holdings.
Thanks so much for having me. I'm excited to be here.
Yes, thank you so much for taking the time. So, you've done all of this in your 20s. So, I want to know before your real estate, what did you do? Were you in diapers? No, I'm just kidding. But what were you doing? What were you doing and how did you discover real estate?
Right, right. Diapers longer than you'd probably think. No, just kidding. Right. So, yeah, so a little bit of backstory on me. I grew up in Ohio, turned 18, and decided to join the military. So I joined the Marine Corps at 18, moved to Virginia for a little while, and then I was in North Carolina for a few years. At that whole time, honestly, I didn't even know what real estate was. I didn't even know what a duplex was. All I knew was that saving money made sense. So I was saving, money while I was doing my first enlistment in the military. And then in 2019 was when I moved to San Diego, California. That was, I went over there to be a drill instructor in the Marine Corps. So I would go yell at kids as my day job. And right at that time, I got somebody who talked to us about using our VA loan to house hack was
Mm.
essentially how it started. At that point, all of a sudden, he said that thing, and I was like, it clicked. It made sense. At that point, though, I still did not have the financial backing because I wasn't, you get a housing allowance in the military when you live off base. However, at my rank, they still made us stay on base and live on base. So I didn't get that housing allowance. And being a drill instructor, you're working like 20 to 24-hour days, like 7 days a week, basically. So I had no time to really like learn about real estate or anything. I just kind of like had this bug in the back of my head. When COVID happened, I got kicked off base as a drill instructor because they needed our rooms to quarantine recruits at the start of COVID. So I got the housing allowance, and then simultaneously I got a supplementary job as a drill instructor, which forced me to basically have way more time or allowed me to have way more time in my day. So at that point, in about May of 2020, was when I said, all right, cool, I want to do this house hack thing. And that at that point, I went on Bigger Pockets. I found basically like the top rated agent in San Diego that I could find. And I said, like, hey, like this is what I want to do. How do I do it? And he sent me a couple like master classes that it was like little like 2 hour Zoom classes that his broker actually did. And so it was about 8 hours worth of like classes about just investing, zoning, San Diego areas, all this stuff. Like it was actually really, really helpful. And then from there, I was literally like, yep, I got this. And so we started putting in offers. I started looking at duplexes, that live in one, rent out the other. But it wasn't really like hitting my criteria, with my criteria basically being I wanted to live for free. I started realizing that triplexes were starting to make the numbers get a little bit closer. And then I got to the point where I was looking at 4 units. And because of the interest rates where they were at, and because, just the prices didn't skyrocket yet in that time, I was able to get into a 4 unit property. It was worth like 1.2. I bought it for a little over 1.2. I bought it for. I put no money down because everything I was sending my lender at the time, like it was the way I was underwriting it, it worked for their underwriting standards with where interest rates were at. So that allowed me to get into a 4 unit property right off the bat, which is like awesome.
So I wanted to talk about um you said, well, you weren't in diapers. You were holding a whole AR. So my apologies for that. And thank you for your service before real estate. And what I wanted to ask, okay, so how did you buy that first property with no money down? Because it's 1.2 million.
Yeah, so the VA loan is a product that, veterans get after a certain amount of service. It's very similar to like an FHA loan or a, conventional 3 or 5% down loan. It's an owner occupied loan, so you have to live in the unit for, you intend to occupy the property as an owner or as an owner occupant, and that's kind of what allows you to get a lower down payment. It's just that the VA loan basically doesn't require it requires a 0% down. So for me, I was
That's
able to
awesome.
get into this property at 0% down, And with interest rates where they were at, and additionally with those loans, when you're buying a multifamily, all of the units that you're not living in, they can take normally it's about 75% of that income, add it to your income to qualify for a more expensive property. And so the interest rate being like crazy low, the rents added on, and then me basically having like no debt at the time, I was able to qualify for a significantly more expensive property than I probably should have been able to. So I was able to get into that. And like I said, I capped out my debt to income ratio right after that. So from there, it was like I stalled out. Like I had to figure out a new way to get scrappy on finding the next deal. And I
Mhm.
just kind of fell into the ADU like land development thing. And that was just kind of the next step. And caught it at a crazy time after that.
So how did you get from that because okay, you cashed out, but from what I know, development is not cheaper than than getting a duplex or multifamily. So how did you decide like, you know what, let me develop, let me learn how to break ground because that's a whole nother monster in itself besides rentals.
Right. So, honestly, like, it was, basically, I met this guy at a meetup, and he started talking about ADUs. Like, it was still really new at this point. Like, there's pretty much, like, no one that was doing it. It wasn't trendy yet, but I just happened to, like, talk to this dude who was teaching about ADUs, and he ended up, explaining basically, like, he's like, "Yeah, you build it 300, you sell it 700." And I was like, "That math makes sense." And I was like, "Let's do this." And
Mhm.
so, I kinda made it a point over the next couple weeks, months, I don't even remember what it was. That was probably like August, September. And so the next like month or two, I was kind of like letting it simmer, like kind of like, doing a little bit of like, hey, whatever. And I ended up in November, like meeting a guy who we were talking about, it, and he's like, yeah, like I want to do development. And I was like, yeah, I want to do development. And his dad was a contractor in San Diego. So he was like, yeah, my dad's a contractor. He'll make sure we don't crash and burn. So because I didn't put any money down on with the VA loan, like I had some money saved up, but I didn't do anything with it yet at that point. He had some money, and then I had like a third buddy that we kind of mutually had met, who had some money. So we basically just pooled all of our money together and we bought some vacant land. We bought it was like 420 that we bought it for. However, land because there's not an existing asset, they generally require a larger down payment. So we needed about 50% down on it. So we put like 230 something down, or 226, I think it was at when we were done. And yeah, we bought some land and we were able to get it permitted or take it through permits. And because the market did this during COVID and because we were able to double the unit count, we actually ended up not going through the full build out process on it. We ended up selling the land, still going through permitting, which is like, this is like the craziest like story I'll never have with like selling a property. We bought it for 420, took it through most of permits. We didn't even get it fully permitted, and we sold it for 1,050,000 like a year and a half later.
Not even fully permitted? That's
Not even fully
crazy.
permitted. It was the wildest time I'll ever and so, like, the market did a lot of things. We did a lot, like, well, because we, really read the code. We really figured out how to maximize this property. Um, and so, yeah, it just kinda created this, like, crazy storm for us to do really well. So, yeah, it ended up it did cost more money, but because I was able to find partners who also were learning, and I think that that's a very important differentiation between when people think raising money, they think that they have to be the actual, the only operator. They have to be the knowledge, the expertise, everything. And then they just go raise money from people that don't understand. Where for me, and pretty much every route that I've taken so far, the money that I've quote unquote raised has been partnerships with other people that have some money but also wanna learn it themselves and have generally different skill sets. Like, we learned that everyone has different personality types, and so that was how I got into it because I was able to, leverage our time, leverage our money to get into it, but there was an equivalent level of risk associated, and none of us were pretending to be, like, the expert. Where I think a lot of people, they try and say like they're the expert, go raise the money, and then they're learning on everyone else's dime. Where we all went into it knowing it's like, hey, we're all learning together. Like we're gonna mess things up, we're gonna fuck things up, and it's gonna be messy, but like we're all in this together. So that was kind of how we did it.
Yeah, that's such an important point when it comes to partnerships as well because you want to be in partners. Like if stuff goes down, like No one can overreact. There shouldn't be blame. There needs to be like, because stuff does happen in real estate, in land development, in renovations and everything. There's always an emergency to happen, and it's how your partners react to that. That's also key when creating a project. So that's just a really good point to bring up. I've never dealt with partners, but I know that's something that is like central to when I look for partners as well. So then how did so you use the money from the land into buy, tell me your development then of your portfolio from there.
Yeah, so we took that land. So in between that time before we sold that, I actually got into another property. Again, my debt to income ratio was kind of screwed. I had some money saved up, but I actually had the one of the partners that I partnered with on the land. He actually had a really good paying job, so I used my owner occupied loan. I put the down payment down, and we bought a property that was going to be conducive for land development. I put the down payment down. I used my owner occupied loan on it, and then he paid for the cost to go through permitting and he helped qualify. And so we were able to do that. And we just split it 50/50. So we got that one. That one we were going to put 8 units on it. Long story, I ended up actually selling that one, but with permits. So I ended up getting some money out of that one. But then from there, that land, we actually 1031 exchanged that into 3 new properties in like 2022. And learned that there's a pretty big difference going from permitting land to managing 13 units of renovation at the same time. So got a lot of learning lessons through the School of Hard Knocks, going through all the different renovations. We bought a property with a code violation on it. We were managing money, not managing people for a good portion of the projects that we were doing there. So just basically found out what over leveraging was. So found out how important it was to really understand how much cash you need in the bank to get a project to the finish line effectively. And then secondarily, learned that it's important to have contingencies on time and money, and so that forced us to really really understand the risk associated with projects. And so from there, we took 2 of those projects. We ended up selling them. We didn't actually lose any money, which was awesome for those. And the third one of those we're building out right now. It's an 11 unit ADU project, along with uh, some other, and so it essentially picked up a couple other projects throughout, partnering with some other people. So now I have probably about 30 units in construction at this point, across the projects. And then, yeah, slowly just picking up more and more as I go. From there, I actually, with one of those partners that I bought the land with, I had him co-sign with me on another property because I wanted to, continue buying. So I put the down payment down on an owner-occupied house. So that was kind of the value that I was bringing, was using my owner-occupied loan and then putting the down payment down. And then he paid for the permits, and he helped me qualify because he actually had a pretty high paying job. So we were able to go, like, we just went 50/50 on another deal. So we got that one down. I had another buddy that we went in on a deal together. He used his owner occupied loan, and then we 1031 exchanged that land into 3 other deals. We went through a good amount of learning lessons because there's a pretty big difference between permitting land and renovating 13 units at the same time. And we learned what those issues were. We essentially we bought a property with code violation. We learned what over leveraging was. Project took longer than we expected. We really learned what the importance of having enough capital was and what over leveraging was. And so we learned that, it's better to do less deals, do them well, and have better cash positions in them rather than just over leverage to the max just for your ego to be able to say you're doing a bunch of projects and building a bunch of units. So from there, ended up selling 2 of those projects, kept on a third one, or held on to the third one. We're actually almost done with the build, so we're building 11 ADUs on that one.
Wow.
And yeah, so just kind of have picked up deals throughout, with different strategic partnerships. I've generally been the operations side and the execution side, along with I have one partner that, we kind of like manage the development project, and we've, ended up starting to bring in more capital. I've gotten like seller financing before on a little bit of one of the deals. So it's been really scrappy to say the least. It's been just all basically I've cashed myself in as much as possible to get the reps on my own dime or with partners that are very much equivalently learning themselves. And now we're at the point where we're starting to, so now I have a design build company. So if somebody has a property, they want us to execute the development for them. We just basically white glove service it for them, take it all the way through. Or now the other thing is we have our own development company where we're just, sourcing our own deals, executing, and then we'll raise capital appropriately for the deal to execute it.
That's awesome. So tell me a little bit, you mentioned 1031 exchange. Can you explain what that is to the audience over here?
Yeah, so high level, so not a CPA. So obviously consult your CPA, but it's essentially a way to defer taxes on capital gains of a property. So if you have a property that you have $1 million of debt, you bought it for call it 1.3. Let's say you bought it for $1 million. It's now worth $2 million, and you've paid down the debt to 500,000. So now you have $1.5 million in equity, aka capital gains that you would you know have to pay on. What you do with the 1031 exchange is you can actually roll those profits into a like kind property. There's certain timeframes associated. So generally,
Yeah.
depends on how you do it, but most of the time you have to identify a property or three properties within 45 days, and you have to place that capital in the next property within 180 days. And you have to use a qualified intermediary. So you can't actually really touch that money if you don't use an intermediary. And that's a lot mistake that a lot of people make. All of a sudden, you don't qualify for the 1031 in most cases. So you take that money, roll it into the next deal, and it can prevent you from having to pay that capital gains tax at the moment. You defer it down the road. And so a lot of people will continue 1031 exchanging it, years after years after years until they die. And then it essentially allows them to uh, transfer that property to a beneficiary and not have to, and basically reassess the property at the new value without having to pay the capital gain. So, like I said, there's a lot in there that like make sure you verify with your CPA, but in a nutshell, that's kind of what it
Well,
is.
that was a great description. That was more than I was even going to say, so that was amazing. And where do we find these partners? Like, where have you had, the option to find people who are as curious as you, who are willing to execute as well? Because I feel like that's what I personally have been a lot of having trouble finding, especially when you're in your 20s and you're like one of the ambitious people in your 20s. It's very hard to find people in the same mindset and who are willing to invest. So what is your strategy for finding good partners?
Yeah, it's a really good question. For me, everything that I have found, even the job that I got when I got out of the military, everything has been meetups and networking. I consistently put myself out there, going to networking events. I probably, even to this day, like I mean, 6 years into it, I probably go to at least one or two every single week. And I go with like no real agenda aside from like I just like drinking beer and talking to people about real estate. And that was really where it started. Especially in the beginning, like, it's actually funny. I'm not saying, like, I recommend that people drink, but it really does, like, kind of if you're a nervous type person, especially going to, like, a networking event, which, like, there's connotations to, networking, but for me, it was like, can I go and just, like, talk to people and have fun? And, yeah, like, going, like, actually, like, legit having, like, a drink or two is makes you so much more, like, able to start those conversations in the beginning. So I actually, like, I don't drink nearly as much as I did when I first started going, but it was a good way to get into it, and yeah, I would just go talk to people, meet people. I'd let them know, like, where I'm at in my journey, what I'm doing, what I'm curious about, and I would, somebody who kinda seem like it's like, "Hey, like, I like what you're doing, you like what I'm doing, let's grab lunch or
Yeah.
let's grab coffee," and continue the conversation, and yeah, so every one of my partners, I have met through networking events or meetups of some sort. Even my job that I worked at for a few years before I ended up, got out of the military, worked at this design and architecture firm for a little over 3 years, and then I quit that job in March of 2025. And now I've been doing my own developments and getting this design build company up and running. So every single person, that job, even like every single one I've met at meetups. And it's just by meeting them, talking to them, following up, and just consistency. Like I see the same people month over month over month. Um, and it's something where like they see you, they start to associate you, especially when you start to get your own like
Yeah.
niche. So for me, it was like obviously ADUs and real estate development that you're at this meetup and it's like, "Hey, like, you need to talk to bro." Like, "Oh, you're talking about ADUs, you need to talk to Brian." And it starts to compound over time. You start to kind of become this, like, pseudo expert in your space by accident almost.
I love it. I love that. That's very true. So, what mindset shift helped you grow like into and expand your ADUs and then eventually your own business?
Yeah, it's a good question. So I think the biggest mindset thing is I've been okay giving away more ownership than I probably need to
Okay.
in order to grow with good people. So there's deals, like I said, the one that I put the money down to buy the property. I used my owner occupied loan. I had my buddy co-sign with me. I probably could have like negotiated with him and got him down to like maybe a 30-70 split or a 40-60 split. But I just said like 50-50 because I'm like, dude, I want you in the deal. I want you as invested as I am. And that got me into a deal where I made a good amount of money doing it. Same with like other partnerships. Like there's times where I could have probably like negotiated a slightly higher ownership percentage in things. But for me, I'm like, I just want people happy, invested, and wanting to do more deals. And so that's allowed me to kind of expand my portfolio, I think, and I'm learning lessons because I'm like at certain points it sometimes makes sense to do less deals and have more ownership. So it's kind of this balance, but up to this point, yeah, I think that's the biggest mindset thing is like I would rather, especially in the beginning, have less ownership to get reps, take that repetition, and then go start to get into more deals with more ownership. So that was probably the biggest thing that's allowed me to get to where I'm at now. And like I said, now we're at the point where we've gotten the reps, we've gotten the proof of concept, the battle scars, and now we kind of have a little bit more, I think, negotiating power without really having to negotiate because we're really just offering the terms that we're offering, and we can bring it to the potential investors.
I love that. That's great. And why ADUs? What attracted you about ADUs?
Yeah. So ADUs, I think in the very beginning, it was like I said, this dude literally was like, "Yeah, like you build at 300 square foot, you sell at 700," and I was like, "That math makes sense. Like, let's do that." So that was really what got me like started on it. But then from there, when I got into escrow on this first piece of land, it was something where I literally like after reading a bunch of code, like municipal code, a bunch of just pages on pages of like city book stuff, we were able to double the unit count on this thing, and my brain just, like, exploded. I was like, "Dude, like, this is amazing. Like, why is everyone not doing this? This is crazy." And I realized over time that part of it is it's confusing, time-consuming, and expensive.
Yeah.
Barrier to entry is really high. There's a lot of unknowns. There's, things like that. So it's something where over time I realized that, like, that was kind of why it started slow, but even now, like, it's literally something that's just over the past 5, 6 years gotten so much more trendy. It's crazy. Like, so many I can't even go like, you can't even go to a meetup now in California without having, like, a crazy amount of people talking about ADUs. Like, I almost, like, can't get into it. Obviously, like, kinda comes up sometimes because 'cause I'm in ADU stuff, but, like, it normally it's something that just, like, everybody talking about ADUs now. And so for me, I just, like I believe that every area, I believe that every city has a niche that is like the peak investment strategy for that area. And for me, like when I got into this, I immediately was like, dude, this is the niche of San Diego. Small distressed or small urban infill where you can add ADUs. So you can renovate the existing property, add additional units to it. Hands down is the move. And I've just continued to have that validated over the past 5 years. So for me, it made sense to me. I believed in and had the resolve that it was really like I was like, this is the strategy that makes sense. And I just continue to run with it. And yeah, I got in a really unique position too, just like seeing so many reps throughout it that I was able to just continue to hone the craft, I guess, and get a lot of repetition and do my own projects. And yeah, it just continued to it's been continually validated the entire time that it's the right move.
And is it difficult to permit ADUs in San Diego? I know in Florida, like, you have to go through a whole large process to add a unit into a property as well. Is it difficult, like, in California as well, a lot of permitting, and different things within the city?
Generally, yes,
Okay.
and that's one of the main reasons why a lot of people want to not be involved in it,
Mm.
or they don't wanna be here, and part of the reason we have such a crazy housing shortage is because it is so difficult to go through this process.
Oh.
For me, I like that. It's like, "Cool, like, let me do it." Less people go figure out somewhere, go to Idaho where you can draw it on the back of map and go in and they'll give you a thumbs up and you build it. Um, so yeah, it is a relatively difficult process. It can be kind of time intensive, especially if you use the wrong team. or you build the wrong project, or you don't manage it effectively. I got all of those learning lessons. I had a project that took 36 months to get through permitting. Um, Built the wrong project, picked the wrong team, didn't manage it effectively. A lot of learning lessons through it. Most of our projects now average anywhere between like 7 and 9 months.
Okay.
So significantly faster, significantly less
Yeah.
headache. And that's to get through permitting. We still have to build it after, so it generally probably ends up about 10 to 14 months full cycle. Um, but yeah, it's a time consuming process, and it can, be pretty expensive, take a lot of time. And so that's where, like, for me, it's like that's where our value kind of comes in of why people, want to work with us on like the service based side or on the investment side, because we have gotten the battle scars, we've gotten through, we've built the checklist, we've built the ways to avoid mistakes and be able to execute projects at a high level.
So give me your tip for patience because you need to be patient to be in the ADU game, is what you're telling me. So how do you maintain your patience? Yeah.
So yeah, flipper money is not development money. If you're going to go raise money, you can't raise the same money for a development project that you would from somebody who's going to invest on a flip. For me, the the patience is something. Number one, you have to understand that it's going to take a while day one. You have to be okay that whatever you think it's going to cost, whatever timeline you think it's going to take, it's probably going to take longer and it's probably going to be more expensive. And the best developers that I know are the people that just they take a problem, because you will have problems. You will have things that come up. Does not matter how good you are at this job or this investment strategy, there will always be shit that comes up. The faster you can solve it, the more efficiently you can get to that solution, the better. The better developer you are. Like the best developers I know get told, "Hey, like we got a shit show we got to handle." It's like, "All right, cool. What's your recommended solution? All right, cool. What if we do this instead? Okay, cool. Yeah, let's do that." And then they just move on. It doesn't bother them. They're not mad that they lost 5 grand in holding costs to at the expense of now taking more time on the project. Like I have people that I've met that will argue for a month and a half on a $3,000 additional fee at the city. Their holding costs are probably 5 to 6 grand on the project per month to begin with. So they spent 9 grand in holding cost to save 3 grand. And so it's like that mindset is like you dump cash into the property for a very long
Yeah.
time. That is just the reality. So you can't expect like a return for a good amount of time. You have to solve problems efficiently and agnostically. And you have to just set expectations correctly. A lot of people, it's hard when somebody gets told the best timeline and the cheapest price, and then every single month there's another problem. Hey, it's going to be an extra
It's
500 bucks. It's going to
frustrating.
be an extra $2,000, and so it's like death by a thousand cuts, and that's what happens with most architects and
Yeah.
contractors when a homeowner or somebody like will work with them, because that's what happens. They give you the lowest price to
Mhm.
get in the door, and then it's just death by a thousand cuts. So for like me, I call myself a professional Band-Aid ripper because I tell them like the reality day one. I'm like, hey, like, here's like based on all the projects I've worked on, like, here's the reality of where you're probably going to end up at in terms of cost. Here's all the line items you're going to need. And this is like the reality of the timeline you're probably going to be in. I'm going to try and beat all of that and make it better. But like, you need to be prepared for this. Otherwise, like, you shouldn't get into this project. So that's kind of like all the pieces.
No, and as an investor yourself, you understand, like, we hate that. Exactly that, what you explained, death by a thousand cuts, in which, okay, we agreed to price, we agreed to how much the materials cost, everything's agreed upon. All we need is the work to get done. And out of nowhere, you need to upcharge a certain material, and they need to do this, and they need to do this. And it's just the most annoying thing to have every single month check up and increase the price. So you as an investor understand. So I'm glad. I always like to work with contractors that are transparent because I cannot deal with that either. So, what did you notice early on in this journey that others might miss?
Oh, man, that's a good question. I, I think that I picked something and stuck with it. I think that a lot of people, they get shiny object syndrome, and they think that, oh, arbitrage or wholesaling because it doesn't require as much money. And then they say, oh, well, I want to do medium term rentals and then Airbnb and then, flipping and whatever, because it's hard to, you know, you aren't good until you're good at something.
Yeah.
Like, and so everything seems like, oh, unless you're like wildly successful the first time, it must be the strategy. I got to go do something else. And so I think that for me, that's really, I think I got lucky, I think, with timing a little bit. But I saw it and I stuck with it. And so I think that that's something that I really recommend is like, do the due diligence to understand, like, talk to other people. What is the thing that like people are talking about in your market and the things that are like, hey, these strategies work, and then find one and just stick with it. It's like there's so many ways to make money in real estate that it doesn't matter which one you pick. Find the one that like makes it that's interesting for you. If you like Airbnb, you like the hospitality industry, stick with it.
Yeah.
Like that's fine. That's great. For me, I like the development. I like the creativity behind it and the problem solving and kind of the puzzle pieces of it. And yeah, I stuck with it and continued adding value to other people and trying to help others how I could. And yeah, it's just grown from there. So I think that's the biggest thing is pick something. Fi Find something as quick as possible while feeling confident that you went through the due diligence to determine what it was, and then just stick with it. Like, say no to everything else. Say no to all the little things that people are gonna say of like, "Hey, maybe I can make a little bit of money doing this thing." It's like, even if you make a little bit less money today, pick a strategy, stick with it.
Love it. That's great advice. And what surprised you the most once you started working with ADUs? Is there anything that surprised you?
I think that the thing that surprised me was amount of the amount of time that can go into or the amount of things that can go wrong. I think the amount of things that can go like projects can be dead before they even start if you do it wrong.
Really?
And so people will buy these projects where they want to, I have it, I literally have it all the time. I had somebody like the other week call me and they bought a property and they said, hey, like, here's what I thought. I want to do this. What can I do? And I looked at it, I'm like, "Y- you're not allowed to do that. Like you can't, like they basically had like part of the house they wanted to convert into an ADU and then another garage. And I'm like looking at it, I'm like, you can't do that. Like it's not allowed. And they'd already bought it. I'm like, "Why didn't you call me?"
Did
Like, they
they
had
even
my
I
number, they
hope
knew
they
who I
told the
was, and I'm like,
realtor what they were
"Why?"
looking to do, like, exactly too.
Well, but it's a I wish they would, but the hard thing is, like, most people don't understand development. Development is
Mm,
very nuanced and very, very confusing. So I think that, most people, like, it's not that you have like, most people, they're like, "Oh, where do I start in real estate or the development?" Or like, "How do I," like, they're talking about, like, reading the code and, like, really figuring it all out. I'm like, "Dude, honestly, like, you don't have to be the expert." I just, like, happened to kind of, like, fall into a role where I was just doing it all day. But it's like, most people, it's like, you don't have to be the expert in any form of real estate whatsoever. You just need to know the person that the expert. 'Cause, like,
mm,
if they're really good at what they do, like, they should be able to tell you in, like, 30 seconds if it's like, "There's gonna be an issue here, and we need to look further into it," or like, "No, you're good." Like, I don't see anything wrong with it. And so that's, I think, something that kinda surprised me was how many things can go wrong if you try and do it yourself.
yeah,
So there's strength in the team. There's strength in asking the experts, paying for that, for them to look at it and for those answers, because you're going to save so much more time going with the right team, talking to the experts before you buy it, rather than getting into it. Because once you get into it, like if it's not feasible, you're stuck with it. Like you now have this property for 2 to 3 years, or you have to sell and maybe you make a little bit of money. Maybe you don't lose a ton of money, but that's one of the biggest things I see is people who just they get into it, they don't think to ask anyone, and then they're like shocked when like they can't do what they want to do.
that's funny. Um, did you have a mentor for development? Like, how did you really learn about the codes? Did you go to class or did you just learn about it at work? How did you learn about development?
So yeah, most of what I had learned, and at least up front, so I had about a year and a half that I was kind of like before I was working at this company, but I was still doing my own development. So I kind of pseudo became this ADU guy. And the majority of that was literally just by reading municipal code on like a regular basis.
Oh.
And I was, like, looking at deals and then she trying to say, "What can I do on this property?" And so I'd go to the municipal code and read it, and it just kinda, like, made me a little bit of, like, a pseudo like, I kinda became the ADU guy when I would go to meetups and stuff. And then I started working at this company, and I just, I guess, was getting more reps. I started getting into more of my own deals, and then I got really lucky. There it wasn't the original CEO that I had met when met him at a networking event. It was actually somebody who kind of came into the role of CEO after I started working
Mhm.
there. But he's been a pretty successful entrepreneur, business person for quite a few years now, and he ended up, like, really dialing in my developer mindset and, like, my investor mindset. So I kind of, like, on one side, I was kind of becoming, like, the ADU expert, and on this other side, I was getting taught how to underwrite and taught how to, like, manage risk and develop my own, like, thought process as an investor from, like, the CEO. So it was, like, it was really interesting, and so I if there was anyone that I would call a mentor, like, it was him. I'm very, like, hesitant to, like, say that word, and, for some reason, it makes me feel weird. But, yeah, if there was one person, it was this guy because he poured into me, taught me so much, on so many different facets of investment and entrepreneurship. But then at the same time, I was just getting reps and reps and reps. So I think that that's the biggest thing that I learned is, like, mentors are great, but it's like if you don't put the reps in,
Yeah.
like, they can tell you things all day long. It doesn't matter.
Mhm. If you don't execute, you're not gonna get the experience. S
Exactly.
so what changes did you, see when you moved from just having a few projects to now hundreds? Like, what were changes that you needed to implement when you increase your portfolio?
Yeah, good question. So obviously a lot of those projects that I was working on out of the 500, though, a lot of those were like other people's projects.
Yeah.
So my portfolio now is probably around like 30 to 40 units in construction right now, and
Oh,
then
wow.
a little bit that's some that have been stabilized. So not like not crazy huge, but
That's
it's definitely
amazing.
as I've been growing. I'm very happy to be here for sure. But yeah, so something that I'm learning now as especially growing this business and growing this like true development company has an infrastructure, has project coordination and project management, asset management, needs its own sales and marketing to help drive leads and things like that. I'm really learning that you have to not outsource, but you have to be able to create systems and
Mm,
processes and figure out how to put other people in their special seat to do it, to execute. Because there's not enough time in the day for me to take out all the sales calls, to manage emails, to review submit all the plan sets and find deals and go to networking events and all these things. So it's like it's been a big push to like figure out really what like I'm offering and how I can add value to people and then put systems and processes around it where I'm not the one doing it. And so something that I can't remember where I heard this, but you have to be okay getting an 80% answer if you're not the one doing the work. And that's something that I've really tried to take into account is like if somebody's going to do 80% as good of a job as I think I could do, if I'm not even touching it to make that happen, that needs to be okay with me. And that allows me to now scale past myself, put other people in positions that they're probably going to be better at than I am to begin with. And it allows me to start taking more of that time working on the company and figuring out where the company's going. And that works whether it's your investment portfolio or your like it doesn't matter. So like for example, in development, like I could have taken on the role of being the construction if I really wanted to, and I could have learned that phase. Instead, I just brought in partners that understood the construction. Um, it allowed me to buy more projects. It allowed me to stay in what I'm good at, which is finding deals, raising money, and executing good projects. And that's so important. It's like don't what is it that half a watermelon is better than a whole grape.
yeah,
And that's exactly what people I think need to take into account when they're trying to scale and things like that is like you shouldn't be doing all of it. You're actually gonna add more risk to the company by trying to do all of it because you aren't good at everything rather than getting the right people in place.
I completely agree. That's gold advice. So, what metrics are you tracking now that your projects are a lot bigger? You're building your own company. What are you tracking to measure success?
Yeah, so, quite a bit, honestly. There's, as this has grown, I
Yeah.
mean, I have my front end personal brand, which is the social media, the community where I teach ADUs, or ADU development and kind of like that whole front end arm of the company. We have our project, management and design build company where we are actually executing projects full cycle for people. So there's like a sales, there's a marketing associated with that and a whole client journey through that process. And then second, no, and then thirdly, or whatever the number, there's the actual ownership side. So the deals that we're buying. So there's investor relations, asset management, management of those projects through finding those deals. So each one has their own like subset of KPIs associated with like
Yes.
how many times a week are we posting, what's the view counts, and what is the engagement we're getting on social media, how many proposals am I giving, feasibility studies that I'm doing inside of uh, the actual design build company. How many events am I doing? How many, people am I talking with on a daily basis? And then how many offers am I putting in? How many projects are we, how many projects do we have on? What's the timelines for those projects? Can we increase efficiency? So there's just like each phase, like you have to have KPIs associated with each kind of like phase of whatever process you're in. And that's going to tell you like whatever time or whatever KPI is like messed up, that's the part of the process that's broken. So I have like basically KPIs for every piece of the business that allows me to kind of identify when one is an issue or not.
That's awesome. That's honestly the best way to think about it. So then what keeps you focused as your opportunities continue expanding, as your business expands? How do you stay focused?
It's a good question. So I actually hired a business coach. So my partner and
Nice.
I hired a business coach the other month to help us kind of really focus and hone in. Because I do think that, it's something that I've never done before, growing like a true business like this. So that helps a lot. Um, and yeah, I think just on a daily basis, keeping to as much of a schedule as you can and starting to, for me, a big piece of it was I actually have had to get a little more selective on the amount of time that I give away for free to people now, and so I need to be very careful with, doing tasks associated with what I believe to be the highest dollar per hour tasks, whether it be finding new leads, finding new deals, finding new partnerships, etcetera. Where before I love teaching, I love helping people, and so anytime somebody would have questions, I'd love to get on a call with them. But over time, I've realized that I owe it to not only myself, but the people in my business that work for me to is only focus on the highest dollar per hour tasks possible, because their livelihood depends on it. So that's kind of been a pretty big mindset shift of really understanding where you can add value and how that translates into, fueling your economic engine.
I love that. You have so many golden nuggets of advice. So what's the last piece of advice that you have for someone in their hustle to holdings journey?
It doesn't take long to execute. Do not get bogged down by trying to understand every single piece before you start moving. Just figure out the right questions to ask them to experts, and then learn on the way down. But if you're taking more than a month or two to get into your first deal or to really start your journey off, you're taking too long.
Damn, you just told me I'm taking too long. I am. Now I know that I am. But do you have a favorite book?
My favorite book would probably be The Almanac of Naval Ravikant. It's a really good. Basically takes his tweets and kind of turns it into a book, but it talks about leverage. It talks about kind of like lifestyle design in a way that I really appreciate. So yeah, if somebody's really trying to like kind of understand just understand from like a very successful person that is not only successful in business, but just like seems to get life. Yeah, best book I could
I
recommend.
love that. It's a lifestyle book, which are so important because sometimes when you read too much business, it can become boring. So you need to like what do I say it? Expand a little bit and then go back into the business books. Do you have a
Yeah.
morning routine?
So for me, I've tried a bajillion, morning routines and the meditation, all these things work. For me, I've actually found that best morning routine for me is literally I'll just wake up. So I wake up anywhere between like 4 and like 5:30 most days. I'll wake up, I'll work for an hour or two on my computer like right away, and then I'll go to the gym after that. And while I'm at the gym, I do like 45 minutes of cardio, but I'll use that time to like I practice Spanish and I focus on, I use that time to do like productive things. And so by that time I've gotten my cardio done. I've worked for a couple hours. I've gotten the workout in, and the rest of the day is easy. So yeah, for me it's like just work a little bit, do the cardio, do the extra or the workout, and crush the day. Like that's been my best routine so
¿Y
far.
por qué estás practicando el español?
Porque, ah, estoy aprendiendo español porque, ah, me gustaría viajar a otros países en el futuro. Entonces, me gustaría, poder, hablar con otras personas.
¡Qué bueno! Entonces, ¿solo español o otro idioma? That's so good. You actually spoke good.
Gracias, gracias.
Where do you
Sí.
wanna
It's
travel?
very we're learning. So I actually went to Mazatlan for like a month last year. I'm going to Costa Rica next month. And just in general, like being in San Diego, like we're so close to so many other, Spanish speaking countries, and even in California, it's useful. So yeah, like all over the place. Like hopefully we'll hit Spain this next year, or this year actually. I'm stoked.
So, where can people find more about you, Brian?
Yeah, best place to get a hold of me would be Instagram. Instagram is the Builder Brian, or on LinkedIn. I'm pretty active as well, so just Brian Coons on there. And yeah, if anyone has anything AD related, especially in San Diego or Southern California, let me be a resource for you. I'd love to help.
Thank you so much for taking the time of your busy schedule to meet with us and to be able to guide us and show us about your journey. I appreciate you for being here.
Thanks for having me on.